Okay, very good morning then. Welcome to the briefing for Wednesday, the 12th of October. As you can see, I'm still sat here. I did not win. What a waste of time, as per usual. Euro Millions. I think Vass's mathematical formula churned out the grand sum of £2.40. So that algorithm's going for the highest bidder. But moving on, let's take a look at the, let's start with the pound today in regards to a pretty big actual move that we saw eventually yesterday. It was actually when it hit its low point shortly after 6 p.m, pretty much exactly to the 121 handle as I'm showing you now. This is what I was kind of conveying yesterday afternoon about when we start getting towards these levels, given granted, we've got the algo spike low seen in the futures down at 2034, but really technically there's not a great deal to the downside, so then the market starts targeting these big round figures, so 22, and then as soon as that gives way to 50, then targeting down to 21 when people are generally taking clips off then as we go through, as they follow that momentum to the downside. So had a question this morning about, the fact that the spike happened and where we are at the moment, but it kind of makes sense, I think, just because of obviously there was kind of the overnight illiquid market when the algo fight took place, and that caused that momentary flash crash in the pound, but the overall trend before then was certainly to the downside. It was ever since that weekend of the Tory conference when Theresa May gave quite a strong, hard Brexit signal that the pound has started to depreciate at a faster, more rapid pace. And then coming back down, ultimately I think we will certainly retest that algo low. It's just a matter of time. Now, will it happen today? Well, given the size and speed of the move yesterday, well, you can't discount that. But I certainly think a test at 120 is on the cards now in the coming week, I would say. Downside from here, I mean, I've seen a lot of investment banks as well. I was reading last night, starting to revise their calls, because most were, I'd say, consensus looking around 120 for year end. I've seen, I think it was Morgan Stanley, they were dropping theirs down to 110, I think others to 105 now in terms of the cable pair. So parity, as I know that I think Rabia has been pushing for, maybe not that far from reality by the end of year, if certainly the pace of sell-off continues the way it has done. As you can see though, in terms of yesterday, obviously quite a drastic sell-off, but what I wanted to show you was this morning, or at least overnight I should say, it was really late in the US trading hours, so late hour evening, and in an overnight Asia Pac trade we had a, don't be fooled, this is a pretty huge rally. We went from 121.30 up to a high on that move at 23.38. So you're looking at like a 200 pip rally overnight in pound. So why did that happen? Well, Theresa May, as much as she's her comments initially caused the downside, the market obviously looking for her to guide these kind of Brexit negotiations and the severity of how harsh this process may be. And overnight there's been a bit of a development because Theresa May has moved to allay concerns about a lack of scrutiny of the government's Brexit plans, agreeing to demands for a full and transparent Commons debate before the Article 50 exit clause is activated. So, putting this a bit of context, yesterday when we had the sell-off, not only were the fundamental backdrop was it negative, you also had one of the newer Bank of England MPC members speak, Michael Saunders, who said that given the scale and persistence of the UK current account deficit, I would not be surprised if the pound falls further. And don't forget, people closely scrutinising, I would say, his comments because he is the newest of the MPC members, so trying to gauge where he kind of lies on the hawk-dove scale. But Theresa May accepting in a debate on a motion from the opposition Labour Party, arguing for a full and transparent debate on the government's plan for leaving the EU, which will allow MPs to be able to properly scrutinise the government's plan to allow for MPs this is to scrutinise the plan of the government prior to the starting of formal negotiations. And the motion will be debated in Parliament today. PM questions as per usual. So I would actually, normally PM questions just goes by every week with very little focus, I'd say, from market participants. But I would say today, if you're trading in the pound, you need to be vigilant around midday when that begins, because she is going to be questioned on this. And her tone, her wording could have the propensity to move the pound today. The next potentially interesting event comes tomorrow, where the High Court in the UK will deem whether or not an Act of Parliament is needed for Article 50 to be triggered. And then a second hearing scheduled for October 17th. So I don't think you're going to be short of, I would say, more volatility coming on the horizon for the pound, both today and the coming days and weeks. So that's kind of the state of play with the pound. But one of the other things that obviously has been capturing quite a few of the headlines has been the Footsie 100. This is the Footsie today. We're down around 1/3%. Maybe if I change the time frames, it'll make a bit more sense. You probably read the newspapers around midday yesterday. We touched fresh record highs here in the pound as the index, some of these blue chip international companies continue to benefit from foreign revenue streams. So the weaker pound actually further assisting the index. If you put it on a 6-month chart, you look at the initial reaction we had around Brexit, and then we've rallied sharply ever since. Although I would say the trajectory of the incline of the Footsie certainly has started to become more shallow, I'd say the trend for the time being, given the pound is expected to continue to weaken, likelihood is we could have some further upside, and at least I'd think that 7,000 is kind of a decent line of psychological support, if anything, as well as being the figure. You can see there we briefly tested it and then came back up again, but the weaker pound probably will continue to act as a bit of a life preserver of the Footsie for the time being, obviously subject to change depending on the aggressiveness of the negotiation process when that truly gets underway. That could then lead to create more uncertainty. But ultimately as well, don't forget, from a monetary policy point of view, all of this hard Brexit talk is only going to kind of probably build in more expectation that the Bank of England are going to have to ultimately deliver on their promise of the lower bound of interest rates being just above zero, so further interest rate cuts could still be on the cards in the future if forecasts are to be followed. Okay, just going back to the charts then, we'll move away from the pound for the moment. Looking elsewhere on just the general setup of the charts this morning, I would say it's a pretty neutral open. Overnight in Asia was fairly subdued. One chart though from yesterday was shortly after we left. We had a bit of an extension of the selling pressure seen in US indices. If you remember me yesterday, I was talking about that Citigroup strategist that had identified 2119 as a big level in the S&P. Well, we got awfully close to that yesterday. We printed at 21 3/4 at the low. We've obviously seen a bit of recovery since that point, but you can see here those the pre-Brexit and post-Brexit kind of resistance level that provided in the SPOOs, eventually breaking above that, but support in early Sep. So I would still be keeping an eye on that level on the downside as a key level of support. Otherwise, looking at the DAX, we've had a bit of usual volatility around the cash open. Now, there are a couple of stories to be aware of, and any of you who follow us on Twitter, the Amplify trading account, you'll see these stories each morning. I do also put them in the live chat room. But this was a big story for the DAX index that, if you're trading the DAX, you have got to be aware of single stock news, particularly as we go into earnings season with European companies will start reporting in the next couple of weeks. Especially you're looking out for like the bigger market cap stocks like Siemens, E.ON, RWE, those kinds of names. But you've had some news overnight where the German government has reached an agreement in principle with utilities on a nuclear decommissioning pact that will probably go into effect in February, according to people with direct knowledge of the matter. So actually RWE and E.ON were called higher in pre-market, and they are trading higher this morning, outperforming the other sectors. On the flip side though, not all plain sailing for European equity news this morning, because Ericsson, that's right, they do still exist. They've not disappeared. Ericsson issued a profit warning this morning. They've said that they continue to battle a severe slowdown in demand for its cell phone towers and switches. And just as after a week after they've announced they are slashing 20% of their domestic workforce. When you have this kind of news for, let's say, telephone makers or telecom makers, then you need to think more laterally about the implications this could have for the broader sector. And then if those companies by default then are large enough to shift an index, then obviously you need to be aware of that from an index futures point of view if you're trading that. So Ericsson, they were down 18% last time I checked. What other company do you think's fallen on the back of Ericsson? Put it into the chat. What other company in Europe do you think has fallen? Yeah, Nokia. Good. Nokia is down around 7-8% as well this morning. They pretty much like for like in terms of what they actually do in terms of a lot of the products and services. Obviously, Samsung, I'm just seeing a headline flash in front of me at the moment. Samsung also issuing a profit warning, slashing its third quarter operating profit by a third as the withdrawal of the troubled Galaxy Note 7 phone ate into its bottom line. So when you have this kind of news, what I tend to do is also keep it in the back of my mind and then come back to it as we go into the US Open. Because ultimately, barring no other news, then what might happen is that the US sectors of similar companies might start to get affected at the Open, and that can have an influencing factor on the direction of the S&P 500 or the Nasdaq at the Open. So certainly as well, going into earnings season, don't forget about the single stock news flow. A quick look elsewhere. The Bund, the DAX in future is slight negative. The Bund then just naturally coming to a point, as you can see here, of just closing the gap pretty much perfectly at that 63.70 after the lower open. Again, not too much on the way of real juicy news flow, I'd say. And looking ahead towards the rest of today, then there's not really a great deal to get our teeth into for the morning. You've got European industrial production. That's going to be at 10 o'clock. But looking at that figure, this is the month-on-month reading on trading economics. So you can see it's a fairly volatile data set, but all with a fairly restricted range on the high and lows. So really you're looking at a +1 to -1% kind of band. This data, though, I don't think will have an influence on prices, so it's not going to be overly important for the market. More so, look out for the OPEC monthly report. That comes out at midday. Latest state of play, there's been a lot of positive and optimistic sounds coming out of Saudi officials. Vladimir Putin, Novak, the energy minister of Russia, towards getting a deal done, whether that be cutting or freezing at a minimum. Looking at oil prices, we still remain supported above 50 for the time being, after obviously that big ramp up that we had when those informal talks in Istanbul were going on, and we had those optimistic comments initially hit the newswire. So looking here, 50 remains a kind of key level psychologically. But then again, it's hard to, I think, still sticking with the trend, the bias would still be for looking at entry points to take the price long once again. You've got the API crude oil inventories. They're not on the calendar here, but I would imagine that they'll be tonight, given the holiday that we had on Monday, and that means the DOEs will be tomorrow. So a slight delay than the usual schedule for the oil numbers. Later on, you've got JOLTS job openings in the US, but FOMC minutes. Now, the minutes of the FOMC could be a little bit more interesting. I did see this preview coming out of Barclays analysts. I would be expecting it to be a kind of, although the dot plot projections, if you remember, it was kind of deemed as a dovish hold because of the very shallow incline of the rate rise trajectory that the Fed had indicated in its dot plot matrix. However, when you're actually going to be looking at the minutes, there were 3 dissenters compared to the previous just 1. So there could be some hawkish undertones that materialize, given that at least 3 of them actually wanted to hike rates as soon as last month or September. So that'll be coming at 7 o'clock. In the interim period, though, you do have 2 speakers as well, both of which are voting members. Now, I'd say Dudley's probably going to be the more interesting of the 2, and Dudley's going to be speaking at 1 p.m. this afternoon. So Dudley kind of sits a bit more moderate, a bit more centre on the hawk-dove scale, so should be able to give you a bit of a better insight into toward the true balance of powers of the thinking of the Fed. With that in mind, I would think that Barclays are pretty much, I agree with them. They think for now the view will be that risk management perspective accommodation should be removed cautiously, given the lack of scope to lower rates in the event of an economic downturn. So kind of hawkish, but with a caveat of being cautious on that process to normalization, I'd say is probably the way to look at Fed communication at the moment. Esther George, as you probably all know by now, she will be crying blue murder, why have we not hiked rates? That's completely to be expected, so I wouldn't get caught off guard if you hear particularly hawkish comments from George. She has been probably one of the most biggest advocates of November being a live meeting, as much as we know that that's probably not going to happen given the timing of the elections. Just to finish off then, that kind of concludes really the docket for today. You don't have any real major corporate earnings. The next kind of day of corporate earnings to look out for is going to be Friday. I think you've got the likes of Citi and JP Morgan, Wells Fargo. They kick off the banking sector, so they'll act as the bellwether for that part of the makeup of the indices. This obviously comes after Alcoa, and Alcoa was another reason for the fairly swift move to the downside yesterday at the US Open. So again, US earnings are going to creep up quite quickly. You need to be aware of how they're coming out, especially the first few and the first of their own sectors, because Alcoa fell as much as 11% yesterday. Missed on their earnings per share, their EPS revenues, and a fairly downbeat outlook. So that pretty much concludes then your briefing. Going to leave it at that, let you get on with it. Any questions, please fire them in the chat. More than happy to help. But have a good trading day.